So, are the rumors true? Is Churchill Capital merging with Lucid Motors? And is this still a good buy, even though it's run up 80% over the last week? What about the company's future plans, in case you get caught holding the bag? I'm going to cover all that. But first, my name is Joseph, and if you're new around here, I primarily cover disruptive innovation and stocks that are poised to take off, whether that be growth stocks, penny stocks, or SPACs in this case. Opportunity is everywhere. So go ahead and hit the subscribe button, turn on the notification bell. That way, you're the first to be notified when I post a video on a stock. The stock market moves quick, so gather the information ASAP. That way, you can make an informed decision. With that out of the way, let's get to it. Earlier this week, Bloomberg stated that Churchill Capital would be merging with Lucid Motors. Although unconfirmed, it launched the price of CCIV all the way up $20 at one point. That was an 80% increase. Now, this 80% increase in the stock price was without any official agreement. Now, can you imagine what could happen if an actual agreement or the confirmation of the rumor was true? But regardless of this rumor, there is definitely a linkage between Churchill Capital and Lucid Motors. And this is by an individual named Andrew Liveris. Now, Andrew is an operating partner with extensive management and operating experience in the chemical sector, specifically referring to the Churchill Capital Group. And at the same time, he is a chairman of the Lucid Board of Directors. On top of that, Andrew also serves as the director of Saudi Aramco, as well as co-chair of the Saudi US. To spice things up even more, Lucid Motors has recently started posting jobs for roles that are related to going public. For example, here on the LinkedIn page, they're posting a job looking for someone that's a stock plan administrator. In addition, there are also job posts for Director of Investor Relations as well as reporting managers, which would only make sense if Lucid Motors was actually going public or going via SPAC. There was a tweet by @LProfessor. He shows a linkage between CCIV and Lucid Motors and how Andrew Liveris is our inside man. But here's a huge warning. Although all the clues are leading to a merger between CCIV and Lucid Motors, we can't forget that in the past, as credible as Bloomberg has been, they're not always 100% right. For example, let's backtrack 6 months. Back in July of 2020, there was news that Topgolf would also go public via Churchill Capital, according to Bloomberg. However, 3 months later, Callaway Golf and Topgolf announced a massive merger. So, although we can place our bets off the credibility of Bloomberg's article, there is still risk that, as we've seen with Topgolf, things might go south, and this could cause the stock price to drop from 18, 19, 20 back down to 10. And that is something that you have to consider before making any kind of stock decision. Now, I'm not saying don't buy the stock, but understand that this play can really go south if it misses the merger. I don't know if you guys were all along the ride for Workhorse, how Workhorse was supposed to get a massive contract for USPS, but things never panned out. Well, back in 2020, the stock price has shot from 15 all the way to 30, and it was hanging there for a couple of days. And as time went on, and as a month went on, you saw Workhorse slowly go up and down, and it's currently sitting at, I believe, $23 a share. So understand that even though that there is massive opportunity, you have to make sure that you're comfortable with this risk, and that maybe putting 100% of your portfolio into this SPAC, or in the hopes of this SPAC merger, that it will actually go through. So, right, I would not put all my eggs into one basket on this one. Hey, but if you do, this could be a big winner. So in conclusion, I'm gonna sit this one out. And I know I might be kicking myself at the end of the week if this thing does double or even triple. Okay, triple, that's a little outlandish. But if the news does break out, I see this stock going to the moon. But if the company merger does go through, I might consider buying it after a pullback. That's because we're looking at what, an 80% run up in the last week, and I anticipate more. But the volatility of it, I'm gonna go with a different stock. I'm going with Tattoo Chef. Yes, Tattoo Chef. I'm gonna make a video on that. I recently purchased a substantial amount in this stock. You know, if I do end up missing out, there will be a little FOMO. I'm not gonna lie, there will be a little FOMO, but I'll come back to my senses and realize that there are a lot more opportunities in the market. So if you miss one, you miss this back, another one's coming. There's just so much hype in the EV space right now. It truly is a wonderful time to be alive if you're investing in EVs. So what are your plans? If this stock misses the merger and it does go back down to $10, are you guys gonna hold, or will you sell your shares and move it somewhere else? Is this stock worth the risk, even if you end up losing 40 to 6% of your value? Let me know down below in the comments. And before you go, if you're looking to add a little more money in your portfolio, go ahead and use my referral link down below in the comments. That way you can sign up for Webull, deposit $100, and get 4 stocks worth up to $3,700. Heck, you might even be able to sell those stocks, profit off those, and move it into another high growth stock. But as always, I have more content coming for you soon.